Welcome to Fun with Annuities with your host, me, Stan the Annuity Man, America's annuity agent. Can annuities be fun? Can contractual guarantees be fun? Absolutely they can. Find out the brutal facts about annuities with no sales pitches or high-pressure nonsense. Just the brutal and factual annuity truth, which is all you need to hear. Let's have some fun with annuities, and let's have that fun start right now. Hey, this is Stan the Annuity Man, and welcome to Fun with Annuities. Today's topic is very important, how the annuity buying process works. I get this question all the time from people that are interested in annuities, and they have absolutely no clue on how the process works. So that's what this podcast is going to be all about. Remember, our goal is to make annuities simple, because annuities are math, they're contracts, and you own them for what they will do, not what they might do. The will do part is the contractual guaranteed part of the contract. Never make a decision to buy an annuity on potentials, hypotheticals, theoreticals, back-tested return scenarios, hopeful agent return scenarios. Buy them for the contractual guarantees because that's what they are, contracts. So what we're going to go through today is if you purchase an annuity through Stan the Annuity Man, how does that work with us? And so we're going to go through the details, fully transparent on how this works, the time frames, how to lock in the quotes if we can do that, the actual information that's needed, etc., and all the exceptions. We're going to go through it all. So hang in there with me. I think this is very important for you to understand, so there'll be no surprises if you go through the process with us, okay? So dealing with Stan the Annuity Man, the only way that I'm going to call you ever is if you set an appointment for me to call. Okay, or if you're a client and I need to get a hold of you about a specific contract. But if you're not a client yet, I'm never going to call you unless you set an appointment for me to call. And there's places on my email and on the website for you to do that. So a lot of times, I never talk to you because you're not ready to go. That's fine. That's the process that we use, which is I respect you. I treat you as a professional. I want you to have all the information needed. I want you to have the best quotes available. And I want you to make your decision, your buying decision, on your time frame. And you're the only one that knows that, so there will be no pesky phone calls or persistency and that type of stuff. You'll get some emails from us. That's about it. So you set the appointment to talk with me. We talked on the phone, numerous times, however much it takes for you to feel comfortable with the decision. And you say, I want to move forward with this specific quote with this specific carrier. Now, from that, when I hear that from you, you say, okay, that's great. We've gone through the limitations and benefits. I've answered all your questions. I'll say, okay, after I hang up this phone with you, what I'm going to do is send you an email so that you can set an appointment with my administrative team. It's the same process of setting an appointment with me. You just go through, you look at their online schedule, and you set an appointment, phone appointment that works for both of you. So you set an appointment with them, and you get on the phone, and they go through all of the questions and fill out the paperwork confidentially. They're just going to ask you all the questions. If the carrier offers an e-app, an online application, we will use that. And so the signatures and all of that will be online. But if they do not, and a lot of them do not, we will use the paper application. And so the administrative team will fill out all the information that you tell them, and then they will overnight that paperwork to you so that you can review it for accuracy and then sign and date it. Now, inside of that overnight that we send you with the application, there's also a prepaid UPS overnight that you're going to send back to us after you sign and date everything, okay? Once I receive the paperwork from you, my team receives that, then I will review the application personally, and then I will sign and date it, and then I will overnight it to the annuity company. That's how the process works. So the annuity company gets it. We will send you an email telling you that we received the paperwork. We've overnighted it to the carrier. Then after the carrier receives it from us, my administrative team, in about 3 to 4 days after that, will start following up with them, and we will keep you updated on the process ongoing via email. So you'll be getting emails. Here's where the process stands. If we're going to need some help from you to either get on the phone or call, we'll tell you. But you'll be in the loop from start to finish from my administrative team via email. So a couple key paperwork points based upon the kind of account that you're using. So let's just say it's an IRA transfer. First thing you have to understand, this is very important. When it's an IRA transfer, it is a non-taxable event. It will not trigger taxes. It's going to transfer from one IRA to the other. Okay? If it is a non-qualified account or a non-IRA account, you're going to write a check made payable to the annuity company. So that's how that's going to work. If it is a 1035 exchange, and 1035 refers to the IRS code that addresses annuity to annuity transfer. So if you're transferring from one annuity to another, that's a 1035 transfer. Once again, a non-taxable event, does not trigger any taxes. Now, if you're transferring from one annuity to another, and this is very important, the annuity that you're transferring to has to be mathematically better and in your favor. It has to be better for you, not just the agent. Okay, so we have to do a side-by-side comparison by law that proves mathematically that the annuity that you're transferring to is better than the one that you're transferring from. And we have to be very upfront about any type of benefits that you might be leaving on the table from your other annuity. And a lot of times, these companies design annuities, especially if you put riders on the annuities, like an income rider on a variable or index annuity, they're almost untransferable because you're going to leave that benefit on the table. Only that accumulation value transfers. And never allow an agent or advisor to say, transfer this because the upfront bonus, which is monopoly money, you need to know that as well, overcomes any surrender charges. Do not transfer an annuity if it has surrender charges. So it has to be out of surrender charges, and the new annuity has to be better for you mathematically than the one you're leaving. Also understand that once you start the transfer process, an agent or advisor cannot stop it. They can't get in the way of it. Once you sign the paperwork that gives legal authorization for that transfer, they cannot get in the way. They can call you, yell at you, be unprofessional, tell you to stop it, but they can't stop it. You're the only one that can stop it. It's your money. So also remember, the policy is delivered to me. Once it's issued, it's delivered to me first, and then I overnight it to you. And then one of the best things I think the annuity companies have done, and the annuity industry as a whole, is we have what's called a free look provision, meaning that you can get your money back after the policy is issued. Every state has a different time frame that you have to respond by to get your money back. And typically it's a 10 to 20 day or maybe 10 to 30 day, depending on your state, you can get your money back. So I love this because sometimes things change in your life, or sometimes you just feel like, you know what, I made this, I don't want to do that anymore. That's fine. We respect that. We won't pester you. We'll just say, okay, and we'll facilitate that free look. But understand, once you get the policy in hand, the free look time period, the clock starts running. Another thing that we need to cover is locking in contractually guaranteed quotes. So when we go through the process and we're on the phone and I send you quotes and we're looking at the quote, we're going through the limitations and benefits of it and all the details that you have to know to make a good decision. With most carriers, they will allow you to lock in that quote, and then we get the paperwork process started. But there are some that don't. There are some that will not lock in the quote, and we'll tell you who those are if that's the carrier that you choose. But understand that that paperwork has to be into that carrier. You know, the application has to be to them within 5 to 7 days. We got to get rolling once we lock it in. You just can't lock it in and think about it. There is no lock in and let me think about it. If you're locking in, you're moving forward. But most of them do allow you to lock in with immediate annuities, deferred income annuities, QLACs, etc. Now, the paperwork and the actual information that's needed, this is one that I really want to make sure that you completely understand, okay? It's similar. If you've ever opened a bank account or a brokerage account, it is very similar to where they're asking you questions about your financial history, your financial information. All of it's confidential. You know, the information we do not sell, we do not share, but we have to ask it by law. They're general industry suitability questions. Now, even before you get on the call with my administrative team, you're going to receive an email with a list of all of that information that you're going to need. I mean, you're going to get it. You're going to know up front. Now, you have to answer every single question. If the carrier wants to know it, if it's part of the application question process, you have to answer the question. There's no exceptions to that. So don't play games. We're not asking any additional questions. Stan, the Annuity Man, is not asking you additional questions that we want to know. We're just going down the list of the application that the carrier has that they want to know. So we're not being creative. We're just asking the questions, period. And that's including breaking down your assets and all of that stuff, again, confidential. And this really, the reason for this, number one, is to protect the consumer. You have to understand that. And they want to just make sure that you have a healthy cushion of liquid assets, that you're not putting all your money into an annuity. Now, this all came about 15 years ago. Clients were putting too much money into annuities. And then once they realized that, instead of saying, I made a mistake, they sued. And then the state sued the carriers. And this is 15 years ago. So about 15 years ago, the carrier said, okay, we're tired of getting sued. We're going to put in a suitability questions in the application process that will prevent that. And that's the reason it's there. So again, we don't sell any information, etc. We don't share it, but you have to answer it. And it's confidential. We don't share it. We don't sell it, period. But understand, you just have to be open with us just to make sure that you're suitable for the annuity that you've chosen. A couple other things. People always ask me about trust. Can a trust own an annuity? Yes, but there's only one type. It's a revocable living trust. That's the only type that can own an annuity. And we're going to need a copy of that trust with the application. Another question I get a lot is, can companies, corporations, LLCs own annuities? Some carriers will allow it. Some will not. And if they do allow it, what you're doing, if a company owns it, corporation, LLC, you're circumventing and giving up that tax deferral part. So for instance, if you bought a MIGA, fixed rate annuity, you're going to have to pay taxes on that interest every year. It's not tax deferred if it's a company, corporation, LLC, etc. So annuities are customizable. The information that we gather is confidential, but just be upfront with us on how you want to structure it. We'll tell you if that carrier can or cannot do that. We'll be brutally honest about the whole thing. So understand too that all of the paperwork processes that we're going to talk about is a general overview of how it works. Obviously nothing is, don't call me up and say, well, you said 3 to 5 days and it's taken 7. Come on now. You know what I'm trying to do here. I'm trying to give you a heads up on how this whole thing works so that you won't be surprised and you'll understand how the process works. Let's specifically talk about time frames. This is very important because going into an annuity purchase, depending on if you write a check, if you transfer it, if it's coming from a 401k, if it's a trust, what are the time frames? What should I expect as a client of yours, Stan, the Annuity Man? What's going to happen? Now, understand you're going to be in the loop the whole way, getting email updates on where we're at in the process, but let's go through all of it. If you write a check with an application, so you're writing a check, it's a non-IRA, non-qualified, you're writing a check and sending an application. First of all, the check is made out to the annuity company. So once the application with the check is received by the carrier, it takes 3 to 5 business days for the carrier to initially review that application for suitability and approval. Once they approve it and they have the check in hand, it takes another 2 to 3 business days to issue the policy. All right. If it is a transfer, and this is IRA to IRA transfer, if it's any transfers that's going from one institution to the other, once again, non-taxable event for qualified assets. Once the paperwork is received by the carrier, it takes, once again, 3 to 5 business days for them to review your application for suitability. And then upon approval, the carrier sends a transfer request to the institution where your money is currently at. So if it's a brokerage, a bank, they're going to send that transfer request to the brokerage and bank, whoever that is. Once that institution receives the transfer request from the annuity company, it generally takes 7 to 10 business days for the funds to then come back to the carrier. So the bank, brokerage, whoever receives the request, 7 to 10 business days later, the money is sent and arrives at the annuity company. That's a general time frame. Once the money arrives to the annuity company, it then takes another 3 to 5 days for the carrier to issue the policy. Okay? Now, with the 401ks and 403bs and those type of thing, when you're transferring assets from those types of plans to an annuity of any type, please understand this. You will have to be involved with us. You will have to probably, not possibly, probably, most likely, get on the phone with that administrator of that plan and give them verbal instructions to transfer it or nudge them to go faster. No exceptions. You're going to have to be involved. And sometimes with IRA transfers, we're going to have to get you involved. We'll tell you when, but with 401ks and 403bs and all those type of plans, you will have to be involved. Understand that. And that's okay. It's just part of the process. And actually, it's good because it's your money. You're the only one that can control what happens to the money, right? So you're going to be the one that's going to call on behalf of your money. Now, transfers from one annuity to another, the IRS calls that, in a non-IRA setting, it's a 1035 transfer. The 1035 refers to the IRS code 1035. If you're really bored and have no life, you can pull it up and read it. But in essence, it says if you're transferring from one annuity to another, it's a non-taxable event, does not trigger taxes. Be very clear upon that. But as I said in the previous part of the podcast, the annuity that you're transferring to has to be mathematically better and in your favor compared to the one that you're transferring from. And we have to do a side-by-side comparison showing you that it is. And the annuity company has to see that in writing before they accept and approve it. So those type of transfers from one annuity to another, where it's an IRA to IRA, if you have an annuity inside of an IRA type structure, whether it's an IRA or non-IRA, if it's annuity to annuity, it takes 3 to 5 weeks. And again, we might have to get you on the phone to nudge them, but we'll let you know when we think that you need to do that. Now, if it's a trust, it's going to add an additional 2 to 5 days to the process. That's just all you need to know. It's just going to add a little bit more time because remember, you're providing a copy of the trust with the application, and the carriers just want to make sure all the I's are dotted and T's are crossed, and you should be happy with that. So just add another 2 to 4 days from all of the other time frames I gave you. And all of these timelines are a general outline of what happens. We will be in contact with you. You will not be sitting there wondering where things are at. We'll let you know what's going on via email throughout the whole process. And if we need to call you, we will, but if we won't just call you unless there needs to be something specifically done on your part. Now, let's go to citizenship qualifications. I get a lot of calls from people outside the U.S. or people that have moved from the U.S. to another country. Let's be very clear on what's acceptable and what's legal. You have to have a valid Social Security number, okay, a valid Social Security number, and be a U.S. resident in a state. No exceptions. There's no gray area. Once again, you have to have a valid Social Security number, and you have to be a U.S. resident in a specific state. And most states will allow you to sign paperwork outside of your state of residence. Most of them will. But understand, if you do that, then the state that you're signing in supersedes everything, meaning that the state that you're signing in, the application has to be the paperwork for that state, and the product you're buying has to be approved in that state. So I'm talking to you vacation homers out there and snowbirds and people like that, but understand that not all states allow that. Not all do. In fact, this list is growing, but let me give you, at the time of this podcast, these are the states that do not allow that. And here they are: Massachusetts, Minnesota, New York, Arkansas, Idaho, Mississippi, Utah, Washington, and Wisconsin. They will not allow you snowbirds to go to Florida or go to California or go to Arizona and sign paperwork there. You have to sign paperwork in your resident state. Let me go through those again. And again, this is as of today's podcast date. I'm assuming this is going to change and we'll have to add to that. But as of right now, Massachusetts, Minnesota, New York, Arkansas, Idaho, Mississippi, Utah, Washington, and Wisconsin do not allow you to sign paperwork outside of those resident states. So remember, all fixed annuities are regulated at the state level. So I see this trend kind of growing a little bit. I'm assuming it's some tax revenue play, right? It always is. All of those decisions seem to be that. let's talk about quickly the state residence coverage. People always ask me about FDIC coverage for CDs versus state guarantee coverages for annuities. This is very important. The state guarantee funds, that whole thing, that whole guarantee and that whole warm fuzzy blanket cannot be used in the sales process. You can't use it as, well, you should buy it because there's a state guarantee fund. FDIC is the best coverage on the planet, period. It is what it is. State guarantee funds, you could go to your specific state to see what those limitations are per policy per owner. And that website is NOLHGA.com. So www, N as in Nancy, O as in Oscar, L as in Larry, H as in Harry, G as in Gary, A as in Apple, NOLHGA.com. And you can find out what your state guarantee fund limitations are. So the reason I bring it up is not only because you shouldn't base your decision on that at all. You should base it on the claims paying ability of the carrier that you choose, not the state guarantee fund. But the state guarantee fund applies to where you're living. So, for instance, if you purchase the annuity in Nebraska and you now live in Florida, then the state guarantee, your residency is in Florida. You've changed residencies. The residency, your current residency is where that state guarantee applies. So you bought it in Nebraska, state guarantee fund applied based upon the state of Nebraska rules. You moved to Florida. Now the state of Florida coverage applies at that because you're a resident of the state of Florida. So just understand that if anybody's trying to pitch you some type of annuity and mentioning state guarantee funds as part of the bullet points, that's illegal. Buy annuities for what they will do, not what they might do, and buy annuities based on the claims paying ability of the carrier that you choose. Now, once again, just kind of to close, we're going to keep you updated on the process via email from start to finish. Very transparent. And you can always pick up the phone and call us. You know that. You can always just pick up and call us on the 800 number or set an appointment to talk to us. We're always available to you. And if we need you to get involved during the process to either speed it up or, for the 401ks and the 403bs and those type of things that you have to be, we will let you know. But the only thing I'm going to ask if you decide to do business with us is have an open line of communication. Be very honest and transparent, just like we're going to be during the process. And I think you'll like the contractual guarantee that you get. But in essence, that's how the process works. I know this has been a lot of information. You can always go back and listen to, the podcast replays just to, get all the nuggets that I threw at you. But I think this is a good foundation for you to understand how the process works. And we look forward to hopefully working with you in the future and hopefully you becoming a client. I thank you for listening. My name is Stan the Annuity Man, and you've been listening to Fun with Annuities. See you next time. Thanks for listening to Fun with Annuities. Please hit the subscribe button and make sure to go to my site at theannuityman.com, where you can run your own SPIA, DIA, and QLAC quotes and see a live feed of the best MYGA fixed rates in the country, and even get indexed and income rider quotes as well. You can also sign up for my 6 Annuity Owner's Manual books, and I'll ship them for free and under no obligation. I also encourage you to schedule a one-on-one call with me, Stan the Annuity Man, so we can have a full discussion of your specific situation. It will be the best brutally factual and truthful advice you will ever get, and that's one guarantee you should definitely take advantage of. So join me next time for the #1 annuity podcast on the planet, Fun with Annuities.